Welcome to this IBKR podcast episode in which we're going to reflect on the state of the Chinese economy and the market's reaction following the government stimulus announced on September the 24th, about 6 weeks ago. And joining me is Dr. Xiaolin Chen, Head of International Business at Crane Shares in London. Welcome, Dr. Chen. How are you?
Thank you so much for having me on your show.
You're very welcome back to the show. I always enjoy having you as a guest here. So tell me, why did the government act, and was there any significance in terms of the timing?
I say it could be a bit of a coincidence, but I do think Fed's action in September offers quite a lot of convenience for PBOC to say, one, we are aligning our interest rate policy now with United States. Finally, after Chinese regulators been implementing easing policy for almost over 7 quarters, finally, that kind of relief of running different directions of our interest rates versus US is off the table now. So Fed definitely offers a lot of convenience. Also long overdue for the Chinese policymaker to introduce in the large scale to really help the economy from bottom up. This time around, they touch base on mortgage, real estate, as you would expect. The differences this time of the policy announcements was 2 things. One, this time around, they provided almost immediate disposable income back to the household. What do I mean by that? Is this mortgage rate cuts is taking an immediate effect. That's going to benefit 50 million households to go and remortgage your mortgage today. That's going to save the household nearly 150 billion RMB interest they're going to pay every year. So that's an immediate income back to the household. Second, really the tone of the policymakers delivering this kind of message. I remember watching this conference. They did a press conference by the governor of PBOC, Bank of China. Mr. Pan was saying, we will do this equity swap program. By the way, that is, you have equity, come forward, borrow money from me. The money you can only buy equity. And so that program is 500 billion, he said, to start with. If it's not enough, let's do another round, 500 billion. If it's not enough, let's do another round of 500 billion. I have to be saying, for 2 decades of covering this market, this kind of tone is unprecedented. They don't speak in that way. So in that instance of the scale, the impact to household, helping on consumer side, and also how determined the policymaker want to make this happen, it's almost reminding me, remember the moment when Mario Draghi says, we do whatever it takes. This is China's moment of we do whatever it takes to get the economy back on track.
So, given that backdrop, it seems that there was a sense of it's different this time. Can you describe the reaction to the announcement?
Market has been waiting for almost this bazooka moment. If it's policy or money, whatever, name it, okay? Finally, that bazooka moment arrived with this announcement. You're absolutely right. Market welcomed the action, the tone, and I particularly welcomed the very efficient execution. When there's a policy you announced, it could take months for it to actually take effect. The government literally announced them in September. The first round of the swap program started to kick off 5 days later. Actually very planned, coordinated to really let's get it rolled out, seriously. So I'm very impressed with how quickly that policy got rolled out. An immediate effect with swap program get kicked off. That differentiated from all the past episodes when they tried to help the economy. Market gave a huge welcome to that. Market rebounded sharply. For people who had a long-term strategic allocation to China, benefited from the immediate jump because market is really way overdue with valuation, performance, everything. So market, some of the fund, like a KWEB, KWEB, is playing consumer, which you can understand the policies helping on consumer. All the times when market was reacting positively to these announcements, gone up by 30-40%, which outperformed the broader market. So yes, market welcomed the announcements, react on top of it, still very far from even this long-term average.
Tell us about the impact on specific sectors. Where was the impact of the stimulus felt most?
Greater question. This is really the staging two to say, listen, you did these announcements, broader beta readied. If you remember, I think David Tipper from the hedge fund got interviewed to say, what you own China? He said everything, which is correct at that point. It's a broader beta ready. Anything you own, gone up. But the staging 2 is exactly your question, which is perfect. Of like, now the broad beta rally has happened. What's the next stage? Staging 2 would be one, which sector the policy will get help the most, and which sector has most disadvantaged because of macro factor driven to have the stock underperformed and then now has the most fundamental value on the upside. That'll be consumer sector. E-commerce, internet. Obviously, don't get too hung up with the internet name. A lot of the internet company in China are e-commerce company, are consumer companies. They offer apps for people to order groceries, technology for people to order taxis, booking doctor appointments, all called internet company, but it's really core technology for Chinese people's daily life. Consumer consumption is the primary focus of Chinese policymakers to help on this round's policy. 40% of China GDP will contributed by consumption. The government wants that to be stabilizing or catch up with developed market will be nearly double that. So that's why they focus on rebalancing the economy, helping the household, helping the consumer. So we do think this time rally that consumption, consumer, e-commerce sector will lead the rally continuously for a long period of time until that's become a very mature driver for Chinese economy.
Can you talk a little bit about onshore versus offshore markets, and especially in the context of the recent addition of shares in Alibaba via the Southbound Connect?
It's another availability of a tool for two things. One, Alibaba is a classic example, contributed by billion of Chinese consumer on daily basis to their revenue. But these stocks are listed in New York Stock Exchange. Investors in China would not be able to open an account in the United States to buy that stock very naturally. You are contributing to the growth, but you're not benefiting from any of the stocks purchased whatsoever. So now, because of a certain discussion on ADR, you could name it, or the company themselves willingness to say, you know what, we do need a secondary listing. So Alibaba initiated that action to say, you know what, we're going to dual list back into Hong Kong as our offshore listing. When that happened, investors domestically say, you know what, I can literally buy that name, understand what their business model are because I contribute that daily. That stocks obviously meet all the technical requirements, now become a qualified Connect stock. That means anybody in China doesn't need to open an account overseas, doesn't need to open an account offshore, then can buy them from Stock Connect. That made the ownership of the stocks shoot up. Just use 10 cents. 10 cents ownership by domestic investors are just shooting up in double digits. So that's one example. That's Alibaba, and that's rationale behind the investors buying into those stocks. Also, another trend happening is Chinese people are rebalancing away of their financial assets from those traditional tangible assets to financial products. Financial product used to be 10-20% of overall financial assets, equity bonds, now has become double that percentage. And the stocks like Alibaba become available onshore for them to buy, become a huge or popular choice for investors to buy. So I say it's two ways. One, make Alibaba available to onshore investors. Also, second, offering a diversification of investment toolkit for domestic investors in China.
Some of the froth has come off the markets, and I think this is a very good opportunity to discuss, to reflect, as I said at the outset, on the market. Do you feel at all disappointed in hindsight? Or I guess the question is, what is next for Chinese markets?
Couple of things. From policy, maybe start with policy. And it's an emerging country. I always say policy matters the most. So policy now is very decisively to say we focus on consumer. I want them to do more. Okay, the last piece of the puzzle is physical. Government, what are you doing? What are you spending on? What are you initiating? What are you leading? I want to see more action on that. And you will, because they concluded NPC, National People's Congress, a few weeks ago, has said they're going to issue more physical bonds, this and that, to spend on physical projects, which is a great start. We want to see action. That is the last piece of it. We will, because they did say in their statements, there's a lot of budget getting approved now, will be released shortly. So hopefully that's going to complete the last piece of the puzzle. That's one. Second, there's an economic working group, which every year senior policymakers in China meet in December. They will review the economic results and what else to do. I hope they're realizing the challenges faced externally and domestically, and then making policy toolkit even more stronger. Third would be resume to normal of the equity IPO market. How long have we not heard a great Chinese firm that's going IPO worldwide? June, when I attended Summer Davos in China, in Dalian. Dalian is the northeast city in China. They hosted Summer Davos this year in June. Jonathan Crane, who's our CEO, we literally went together. I attended one session, more selected, but it's actually have quite a lot of people there. Listen to Premier Li, Chinese Premier Li's speech. He was sharing the stage with Poland Premier and also Vietnam Premier all on the same stage. In his 20 minutes of speech, he mentioned innovation 35 times. I think China needs to show more decisive moves in those areas to support the weighted area to become more public. We also met with Bonnie, who is the CEO of Hong Kong Stock Exchange. She literally told me this is the data, probably 3-4 months old. She has 110 good applications ready to go in IPO market in Hong Kong. She told us her counterparts onshore in Shanghai have 80. So if that's in combination, you have close to 200 names to go to market. We want to see that. That is another sign to resume. The market are not pressing none of that. Last one, and I will pause there, is share repurchasing. All these companies saying, listen, my valuation at the historical low, we have beautiful fundamental futures. As an investor, you say, show me your money. And this is exactly what Alibaba been doing. Use Alibaba as an example. They say, you know what? We're going to give some dividend back to the investor to reward them. Second, we're going to keep the cash to buy our shares back. At the end of the repurchasing program, Alibaba going to shrink their stock by 14%, 1/4. So if 100 shares outstanding, you're going to left with 86. This is another sign of corporate themselves to say, this is the bottom. The put has been activated. None of that has been properly rewarded by the market.
And finally, I guess I should ask you for any thoughts on the outlook for Chinese companies as a result of the election of President-elect Trump.
Great question, because this is the question I get asked almost every day now on that. I think it's very valid concern. There's policies announced and so on and so forth during the campaign to now the actual, you'll be resuming the office and how you're going to actually implement the actual policy you're going to implement. I think there's always some discrepancies between the two. We shall wait and see. That's one. Second, I always believe, you got to agree with me on this, is tariff is double-edged sword. Okay? It's not only to manage one side, the consumer in US, the corporates in US also get hurt at the same time. I hope that's going to be a negotiation, discussion, starting point as one. I like to believe that the people surrounded Trump are all business person. I like to believe we are business person. We like to believe if you deal with people are business oriented to do whatever is good for the business, whatever is good for the corporates, then there's a way to work together. There's a path to negotiate. There's a path to agree. During Trump's first administration, they literally signed a deal with China to say, you buy my agriculture products, then I will allow such and such to happen. He's still announcing his whole team, senior member team. I do hope that there will be a constructive path forward. Elon Musk, he's the biggest sponsor of his entire campaign. His Tesla has nearly 1/3 of the revenue from China. His experience interacting with China has nothing but good. He wants to set up Tesla factory in China, in Shanghai. He talked to Premier Li. Back then, Premier Li was the mayor of Shanghai. He said, I want to set up my factory. From A to Z, it was a few months, 2 or 3 months to make that happen. I think his experience interacting with China, getting his business out, and then working with the people has been nothing but good. So hopefully that means we could work on a constructive path on both sides.
Dr. Xiaolin Chen, thank you very much for joining me. Dr. Chen is Head of International Business at Crane Chairs in London. Thank you for joining me.
Thank you.
And don't forget to the audience to subscribe to our podcast wherever you download yours from.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice.